Okay, so as I was saying, we are talking about the topic 4, that is accounting for assets and liabilities. And specifically, we shall be talking about the PPE. PPE means property, plant, and equipment. We have it here, PPE, property, plant, and equipment, IS 16. And we shall talk about, so when we talk about IS 16, we shall be talking about depreciation, acquisition, disposal, and exchange, excluding revaluation. So we shall not dive into revaluation. So if we find a question concerning revaluation, we shall ignore, because that one is beyond our notes. So revaluation, you should be doing it, those will be doing intermediate level. So as we start with the definition, we shall start with the definition of a bearer plant. And we say that a bearer plant is a living plant that is used in production and supply of agricultural products. So in production and supply of agriculture product. Number 2, a bearer plant is expected to bear produce for more than one period. And number 3, has the remote likelihood of being sold as an agriculture produce. That's a bearer plant. Now, you also need to know what's the carrying amount. Now, carrying amount is another name of the net book value, NBV, net book value. So we say carrying amount is the amount which an asset is recognized after deducting the accumulated depreciation. So it's the amount which an asset is recognized after deducting the accumulated depreciation, and this is how you get it. Carrying amount, which is equal to NB and net book value, is equal to cost less the accumulated depreciation. Now, this value is the value at the balance sheet. Also say the carrying amount is the value at the balance sheet. You can go into bracket. This is the value as at the balance sheet, as at I'm at the year end. I'm at the balance sheet. So that value at the balance sheet, is what we call the carrying amount, and this is called the net book value. Then the cost, the amount of cash or cash equivalent that was paid to acquire an asset during acquisition or construction. So any cost, so not any cost, any amount that was paid to acquire an asset during its acquisition period. Remember the word acquisition, meaning at the beginning of acquisition of that asset, before the asset ikakuwa yako, so before it was transferred. So that period is where we are talking about the cost. So during the time of acquisition or construction, and that one is the cost. Tuangalia how to determine the cost. Then depreciable amount, this amount which is subject to depreciation. So we can also say depreciable amount is the amount subjected to depreciation. Subjected to depreciation. And which amount is subject to depreciation? Now, the amount which is subject to depreciation is the cost. So the cost is mostly the amount which is subject to depreciation. So the cost is mostly the amount which is subject to depreciation. You can also say it is the cost of an asset or other amount substituted for cost, but remember to raise any residual value. Residual value, this is the value of an asset at the end of useful life. So residual value, let me see if I may define the word residual value, but the word residual value refers to the value of the assets at the end of the period. Refers to the value of the assets. Okay, let us define it. They have not defined it. So we can say that the residual value, other people call them scrap value. Scrap value. Now, this is the value of the asset at the end of the useful life. This is the value of assets at the end of its useful life. So kind of ukiingia una mute, kwa sababu usipo mute utaniharibia net, saidi itakataa kurekod. So ukiingia mute. So this is the value of asset at the end of its useful life. Now, for example, you acquired an asset 5 years ago. you have used it for the last 5 years. Now you can sell that asset today. So ulinunua asset maybe 5 years ago, umetumia for 5 years. Now you want to sell it. So when you sell it, we call it the resale value or the residual value or the scrap value. So because that value maybe imefika mwisho wake or the useful life of that asset imeisha. So there's amount you can sell it. We call them the scrap value. So it's the value of an asset at the end of its useful life. Let us continue. Let us continue. Let us define what is the word entity specific value. Entity specific value. So entity specific value. So what is entity specific value? Now, it is the present value of the cash flow of an entity. It is the present value of cash flow of an entity. So it is the present value. So it is the present value of the cash flow of an entity, except expects to rise. So if it is the present value of the cash, the present value of the cash flows, an entity of the cash flows, an entity expect to arise from what? From the continuing use of the asset, from the continuing use of an asset, of the continuing use of an asset, and from its disposal, and from its disposal at the end of useful life of an asset. Now the value, now if a company has an asset, now if a company has this asset, let's say the company has this asset, this is the asset of the company, and the company is using this asset to generate income. So the company uses this asset to generate income today. So the company is generating income from this asset today, or the revenue, income or the revenue. So the company is generating the revenue from this asset today, which these are what we call, so these two items, the income or the revenue, so we call the cash flows. These are the cash flows. Now today means present value. So if a company uses their assets today to generate the cash flows, which are in form of revenue, then that value is what we call the entity specific value. So that value that the company generates is what we call the entity specific value. So the value that the company generates from using an asset to the company, the value that the company generates, the cash flow that the company generates from using an asset today is what we call the entity specific value. Entity specific value. We can move on. That's what we call the entity specific value. That is what we call the entity specific value. Let us see another definition. So mostly we are dealing with definitions. Mostly we are dealing with the definitions. The next definition is definition of fair value. So make sure you know this definition kwa sababu zitakusaidia sana. Fair value. So what's a fair value? And how is it different from the carrying amount? So what's a fair value? Now, fair value is the value which an asset can be sold or an liability settled between two knowledgeable parties today. So we say fair value. So you can say fair value. Just a moment. Kidogo tu kidogo. So fair value. Fair value. So we say fair value is a price that will be received. Is the price that would be received. It is the price that will be received to sell an asset. To sell an asset or to settle or pay a liability or to pay a liability in an ordinary transaction. In an ordinary transaction. In ordinary transaction between market participants, between the market participant and so between the market participants at the measurement date. At the measurement date. So let us explain it. So it is the price that will be received. Now we are talking about today at the measurement. So let us assume that the measurement date is today. Let us assume, for example, you want to so tunasema at the measurement today. So tunasemaje? Just a moment. So tunasema hivi, nini yangu ilikuwa imepotea. But I think iko sawa. Okay, ni sawa. So tunasema when we talk about the fair value, we say it is a price that will be received to sell an asset. Okay, when we talk about fair value, it is that value that is transacted between two knowledgeable parties. So the parties who engage in this transaction must be knowledgeable to know the price in the market. So that we say it is the fair value. So the value that is fair to, so it's a price that will be received to sell an asset. So we say number one, the keyword is the one, the price that will be received to sell an asset or to settle a liability. Sorry for that. So tunasema it is that price that will be received to sell an asset and also to settle or to pay a liability. Now it is that value that a person who has a knowledge or a person who is of sound mind would accept to sell their asset or to pay liabilities in an orderly transaction. So between the market participant and is at the market is at the measurement date. So in short, what we try to say, it is the price that is that can be used to sell an asset or to pay a liability between two knowledgeable parties. So between two knowledgeable parties, what does that mean? Knowledgeable party, those two parties knows the price of the items in the market, either the price of the asset or the price to pay the liability. So they know that price, and that is the price they can accept. So that price which they can accept is what we call the fair value. So it's a price that will be received to sell an asset. So for example, kama unataka kuuza kitabu. So kama for example unataka kuuza a book, ununue kitabu 400. Now, the price that you can sell this book is maybe 350. And this 350 is the price which the other party can accept. So that price of 350 at the measurement date, so yes, umetumia kitabu, maybe the price umeitumia for 1 year. So the price of that book may reduce from 400 to 350. So this 350 is the price which is fair. It is the price which can be accepted by between the parties who are engaged in this transaction. So the seller of this book and the person who is receiving the book. And that's what we are saying is the price that will be received to sell an asset. So if, for example, you're selling a book, or to settle a liability if you are paying your debt in an orderly transaction between the market participants, so the market participants are the people involved, at the measurement date. The measurement date is the date you are selling that book, is the date you are selling that book, and not the initial cost. Remember, and not the initial cost. Is the price that you are selling that book as at that time. That's the measurement date, and not the time you acquired that asset. That one is fine. Let us move on to another definition. Impairment loss. Impairment loss. So what's an impairment loss? It's the amount which a carrying amount of an asset exceeds the recoverable amount. It is the amount of which carrying amount of an asset exceeds. So it's the amount which the carrying amount of an asset exceeds its recoverable amount. Its recoverable amount. So we shall talk about it later also, but not so much. This one you shall do it in financial reporting. For now, just know the definition. So when the carrying amount is more than the recoverable amount, then you have an impairment loss. So when the carrying amount is more than the recoverable amount, the amount is called the impairment loss. So let us define PPE. Now PPE. So what's the definition of PPE? Now PPE means these are tangible items that these are tangible items that number A. So that number A are held for use in production. Are held for use in production. Are held for use in production or supply of goods and service. Or supply of goods and services. For rental to others, you can also add for rental to others. For rental to others. You can also say or for administrative purpose, or for administrative purpose. Number B, PP, these are tangible assets that are expected to be used. Expected to be used. Are expected to be used during more than one period. During more than one period. Now that's the definition of a PPE. And remember, PPE means an asset. Remember, PPE means an asset. So these assets which are tangible, you can touch them. So you can touch them. So when you are told to define a PPE in an exam, make sure it has the two definitions. Number one, so make sure you put the way in nimeandika hivi. So PPE are tangible assets that, number one, they are held for use in production, meaning they are used in production of goods and services so that you can sell those goods. Number two, they can be used to supply goods and service. For example, a motor vehicle. A motor vehicle can be used to supply goods and services, or for rental. So you can rent a building. So you can rent a building, or for administrative purpose. So that building can also be used, or that asset can also be used for administrative purpose, and are expected to be used during more than one period, and are expected to be used for more than one period. So that's the definition of the word PPE. Now, what's the recoverable amount? Let's define out the recoverable amount. Recoverable amount. Recoverable amount, this amount. Now we know the carrying amount. We know that the carrying amount is the amount which you find in the balance sheet. So we say that the carrying amount is the amount that you find in the balance sheet, meaning it is the cost less accumulated depreciation. Cost less accumulated depreciation, or the net book value. Now let us see now the recoverable amount. So what's the recoverable amount, and how is it important? Now, is the higher of asset fair value? Is the higher of assets fair value? So it's the higher of assets, is the higher of an assets. It's the higher of an assets. Let's see the equation. It's the higher of an assets fair value. So it's the higher of an assets fair value, less cost of sale. Less cost to sell. So less cost to sell and value in use, and its value in use. So this is the value. So recoverable amount is equal to the fair value minus cost to sell. These are mostly you shall use this formula in your intermediate level. Those who migrate to intermediate level, while we shall be doing financial reporting and advanced financial reporting. Mostly in advanced financial reporting, we shall be using this formula so much. Now let us see the residual value. Residual value, meaning of the word residual value. Residual value, or the scrap value. Of course, we may define somewhere, but we can define it visually now. It's the estimated amount. It's the estimated amount that an entity would currently obtain from the disposal of that asset. So it is the estimated amount that an entity. It is the estimated amount that an entity. So it is the estimated amount that an entity would currently obtain would currently obtain. So that value that an entity will currently obtain from the disposal of an asset. From disposal of an asset. From disposal of an asset. After deducting estimated cost. Estimated cost of disposal. So that's what we mean by the word residual value. So it is the expected amount that an entity would obtain from disposing or from the disposal of an asset after deducting the cost of the disposal. After deducting the cost of disposal. After deducting the cost of disposal, we can also add this one. If the asset was of age, the asset was, if the asset was already of age, and the condition and the condition expected in the was already of age, and the condition expected at the end of its life, and in the condition expected at the end of its useful life, at end of its useful life. That is it. So at the end of this life, so when you use an asset for some time and then you dispose it, so that value that you dispose it at the end of that useful life is what we call the residual value. It's what we call the residual value. Now let's define what is a useful life. Let us define what is a useful life. Someone to define for us useful life. We can have the board. Who will help us to define the word useful life? Elisha. Now, Elisha, what's a useful life? Because we'll be talking about useful life. Useful life. What is useful life? Elisha. How much Elisha? Nimemuuliza swali akaamua ku left. That's not a serious person. Na ni nani wala simujui? Who is Elisha? I don't know that guy. So let us define what is a useful life. So what is a useful life? Now let us see what is a useful life. So a useful life is defined as, it is defined as number one, the period over which an asset is expected to be available. The period an asset is expected to be available. The period to which an asset, so the period over which, the period over which, the period over which an asset is expected, so the period over which an asset is expected to be available for use by the entity. Expected to be available for use for the entity. That is number one. Elisha very ajitambulishe ni nani? Number two, the number of production. So huyo jamaa ajitambulishe. The number of production or similar units. So the number of production or similar units expected to be obtained from expected to be obtained from the asset. Expected to be obtained from the assets. Expected to be obtained from the assets by the entity. So that's the two definition of the word useful life. Now it's the period over which an asset is expected to be available. So the time period that is expected that it's expected to be used. So the number of period or the time that is expected to use that asset before that asset is sold as a scrap is called the useful life. Or number two, the total number of production that you expect to obtain from that asset. That number of units, if you expect that I will use these units and obtain 10,000 units. Now, once I obtain these 10 units, the asset will be considered as a scrap. So in that case, when you manage to obtain all these 10 units, then the item we shall categorize them as the end of that useful life. So, but in most cases, we go with the years. So number one is the most best one. The number of years that the asset is expected to last. So number of years that that asset is expected to last is what we call the useful life. Or number B, the number of production that asset is expected to produce in a given period is also called the useful life. So what we expect from that asset is what we call the useful life. That one is okay. Elisha hajajitambulisha ni nani, hata simujui. Ajitambulishe tukisonga. Let us talk about the recognition of PPE. Recognition of PPE. I want to know that who is that person. Recognition of PPE. This one is very important. So this one is very, very important. This one is very, very important. In exams, they can tell you, explain how property, plant, and equipment is recognized. This is how you say. So if I say this is the answer, the cost of an item in PPE, the cost of an item in PPE shall be recognized as an asset. Shall be recognized as an asset if and only if number one. So the cost of an item shall be recognized as an asset if and only if number one, it is probable that the future economic benefit. It is probable that future economic benefit. That future economic benefits. That future economic benefit. That the future economic benefit associated with the item will flow into the entity. Associated with the asset. With the asset will flow to the entity. That's number one. Now, if there is no any future economic benefit expected from this asset, if there is no any future economic benefit expected from this asset, then we shall not categorize that asset. We shall not recognize that asset in our statements. We shall not recognize that asset in our statement. Now, a PPE shall be recognized in the financial statement if number one, it is probable that the future economic benefit associated with that asset will flow into the entity. That is number one. Number two, the cost of an item can be measured reliably. The cost of that item can be measured reliably. So the cost of that item can be measured reliably. Now, if you cannot measure the cost of that asset, then that asset cannot be recognized in the financial statement. So that item can be measured reliably. So it is possible to measure the cost of that asset. So if that asset cannot be measured reliably, then we shall not recognize that asset in our financial statement. It cannot be recognized. So it can only be recognized if the cost of that asset can be measured. So that the cost of that item can be measured reliably. Number next, initial recognition. Let's talk about the initial recognition. Initial recognition of PPE. Initial recognition of PPE. Now, what do you say? So, item of PPE may be acquired for safety and environmental reason. You can say item of PPE may be acquired for safety and environmental reasons. So item of the PPE may be acquired for safety and environmental reasons. The acquisition of such PPE, although not directly increasing the future economic benefit of any particular existing item of PPE, may be necessary for an entity to obtain future economic benefit from its entity. So we say the acquisition. So we say the acquisition. We say okay, for any. Okay, let's move on. So Elisha aja type ngoja type watuambie ni nani. So tunasema the acquisition of the acquisition of such PPE, although not directly increasing future economic benefit, although not directly increasing the future economic benefits of any particular existing property, of any particular existing PPE, of existing PPE may be necessary for an entity. May be necessary for entity to obtain future economic benefit from other assets. Future economic benefits from other assets. Now we have these items where when we acquire them, those items are PPE, but those items cannot generate income. Now, those items is what we call the items that have been acquired for safety and environmental reasons. Now, the acquisition of such PPE, although not directly increasing the economic benefit, they are not directly increasing the economic benefit, but they are there to help to increase the economic, but they do not directly increase the economic benefit. For example, if they acquire an asset to reduce pollution in the environment. Now, that asset, that form of a PPE is acquired purposely to reduce what we call pollution in the environment, but they do not directly help in increasing the economic benefit of that entity. Now, in that case, it will be reasonable for that company to use the existing PPE. So it will be reasonable for that asset to use the existing PPE to do what? To obtain future economic benefits from the other assets. But that asset shall be recognized as PPE. Shall be recognized as PPE. That one is fine. So anytime, make sure you text me. I don't think I have your number. Now you can say such PPE qualify for recognition. Qualify for recognition. Such assets qualify for recognition because they enable the entity, to derive future economic benefits. Because they enable the entity derive future economic benefits from other assets. Future economic benefits from related assets or from the other assets. From related assets. Let us say subsequent. Okay. Let's go to measurement and recognition. Measurement at recognition. Measurement at recognition. Measurement at recognition. So allow me to put huku juu. Measurement at recognition. Measurement at recognition. Now we say an item of PPE, that qualify for recognition, that qualify for recognition. So as an asset, shall be measured at cost. Shall be measured at cost. That one is very important. Now that one is the initial measurement. So any item which qualifies, for recognition as an asset shall be measured at cost. So it shall be measured at cost. So any item which qualify for recognition shall be measured at cost. Now, the cost of the self-constructed asset is determined using the same principle as an acquired asset. So we say the cost of self-constructed assets. The cost of self-constructed assets is determined on the same principles as for acquired assets. As for acquired assets. So that's the cost of an item of PP. Cost of items of PPE includes, number one, we can say the purchase price. Number one, purchase price, which is made up of purchase price. So this purchase price including import duty, So this is we call them the incidental cost. Import duty, non-refundable purchase taxes, non-refundable purchase taxes, after deducting trade discount and rebates. So rebates is also a form of discount. Silvio, is rebates any form of discount? We can say any cost directly attributable to bring the assets to the location. And condition necessary for it to be capable of operating. Condition necessary for the assets, the PPE, to be capable of operating. That one is okay. That one is fine. Let's see another one. The initial cost, number C. The initial cost of dismantling. So the initial cost of dismantling initial cost of dismantling and removing an item. And removing an item and restoring the site. And restoring the site. On which it is located. That one is okay. That one is okay. Cost not associated as PP. Let us see. Cost not associated. Cost not associated. Cost not associated or not cost of PPE. What are those items? Cost ukiona ujue they are not part of PPE. So which one is them? Number one, example of those costs not associated or not cost of PPE. Number one, you can say cost of opening new facility. Cost of opening new facility. Number B, we can talk about cost of introducing new product. Cost of introducing new products or services. That will not be categorized as cost of new facility. That will not cost of PPE. Next, cost of conducting business new facility. Cost of conducting business in new location stroke site. So that will also not be considered as the cost of PPE. Cost of conducting business in new location. Administration cost and overhead cost. Administration cost and overhead cost. What are the overhead costs? Overhead costs are costs which are incurred indirectly in production. So overhead costs, these are costs incurred indirectly in production. So when you see the word overhead cost, you shall say that overhead costs, these are costs which are incurred indirectly in production. 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 That one is okay. So you can name those ones. Those are what are is important. That one is what is important. So you can name just those items. So those are the costs which are not associated. Hadi hapo tuko sawa? Tuko shwari mpaka hapo? Sawa sawa. Now, let us see. What else do we need to put? So let us see cash and cash price equivalent. Let us see what is cash price equivalent. Cash price equivalent. Okay, tafuta important items. Second one, niambie kila kitu because tusiandike sana. Allow me to present. Let me present the screen. Nimechoka kuandika. Allow me to present the screen. Tafadhali. Nasikia nimechoka bwana. Now that one, I want to talk about the cash equivalent, cash price equivalent. Now cash price equivalent, what does it mean? So can you see my board, my presentation?
Yes.
Okay, so cash price equivalent. Now what's cash price equivalent? The cash price equivalent is the cost of the PPE. So when we talk about the cash price equivalent, refer to the cost of an item, that is the cost of an item of PPE is such that the cash price equivalent at the recognition date. So this one is the cost at the recognition date. So when we talk about the cash price equivalent, we are talking about the cost of that item during the recognition date, or during the time of acquisition, So remember, due to explain what is a cost, and the cost we said it refers to the cash and the cash equivalents of the PPE at the date of acquisition of that asset, or at the date of construction of that asset. That is the same thing here. Is the cost, or it's the cash price equivalent as at the date of recognition, or the recognition date. That's what you need to know. The rest tunachana nayo. Asset exchange. So we need to talk about the asset exchange. Now, asset exchange is where we exchange one asset with another asset. So in the there's a time where you find that the items in the PPE are exchanged. So for example, you bought a motor vehicle. Then in the process you exchange that motor vehicle with another motor vehicle. Maybe because that motor vehicle iko na issues or imetumika sana, you decide to exchange that motor vehicle with another motor vehicle. That is what we call the asset exchange. So one or more item of PPE may be acquired in exchange for non-monetary assets, or a combination of the monetary or non-monetary assets. That's what we call the asset exchange. Now, for example, umenunua gari, ukatumia gari kwa miaka mbili, then you decide to exchange that car with another car. Now what you do, you exchange that car and then you add some cash on it. So hiyo gari then una exchange na gari mpya, but hiyo gari mpya utalipa the amount ya hiyo gari, utalipa amount less than the initial amount of that car, then you exchange with the car yenye uko nayo. That's what we call the exchange, the asset exchange. So you exchange an asset with another asset, but you remember you shall add some monetary value on it. So that's what we call an asset exchange. So one or more item of PPE may be acquired in exchange for non-monetary assets, or combination of monetary and non-monetary assets. The following discussion refers to simply an exchange of one non-monetary assets for another, but it is also applies to all exchanges described in the preceding sentences. It can be for monetary or non-monetary. So there's a more exchange that gari na another gari. So your gari in exchange, it is non-monetary, but remember you deliver some amount on it. So it can be both monetary and non-monetary. The cost of such item is measured at fair value. Now, for when you're doing an asset exchange, the cost of that PP will be measured at fair value and not cost. So underline the word. So let me show you here. Let me show you this one. This one, you can see that one. Now it is measured at fair value and not cost. Remember, in the other side, we said when we measure a PP, it is measured initially at cost. Now, but when you're doing an exchange, then the cost will not be measured at cost, but it will be measured at the fair value. It will be measured at the fair value. So that's what you need to know at the exchange. The rest of the item, this one, all these other items, you shall do it in advanced level. So in this case, we are not interested with that one. We are interested with the measurement of asset exchange. So it is measured at the fair value only. So let us go to another part. I think that one is okay. Nataka niteremke hapa chini. Taitoa aje hii. Sawa. Imetoka. Now you also need to know this one. So let's write this one down. Kwani Zoom iko na shida gani? Zoom nayo iko na shida gani bwana? Okay, let me present again. Naona imekatika. So let us see this one. Now, the fair value of asset is measured in variable if, number one, the variability in range of the reasonable fair value measurement is not significant for that asset, or the probabilities of various estimates within the range
Excuse me, sir, we can't hear you.
Teacher hausikiki. I can't hear you.
Hello, mnasema ati hamnisikii?
Sasa tunakusikia, ulikuwa umeshapotea.
So nimekuwa nikijiongelesha.
Exactly.
Ulikuwa unajiongelea.
Nilipotelea wapi?
Measurement after recognition.
Measurement after recognition. Measurement after recognition, let me see. Wow. Hapo.
Yeah.
So I was saying, yeah, that one is okay. Now we talk about the measurement, this one, measurement after recognition. Now this one is to be after you have recognized your asset. Now, remember before recognition, that before recognition, any asset of PPE shall be measured at cost. Remember before recognition. So remember before recognition. Now PPE will be measured on cost. So the PPE will be measured on cost. That one is before recognition. But after recognition, now the PPE will be measured at cost, you less. So after recognition, the PPE will be measured at cost. At cost, it will be measured at cost with less accumulated depreciation. And we have two methods. We have two methods that are used when we measure PPE after recognition. Let us read this statement here. This statement here. You can see this statement in ASEMA. What does it say? In ASEMA, an entity, you can see this statement here. You can see this statement. An entity, now mute. So an entity shall measure, an entity shall choose either the cost model or the revaluation model as the accounting policy, and shall apply that policy as the entity, as the entire class of PPE. That one is very, very important. This statement is very, very important. An entity shall choose either the cost model or the revaluation model as its accounting policy, and shall apply that policy to the entire class of the PPE. Shall apply the entire policy. For example, come on to me, the policy, the same accounting policy shall be applied to all the items of the PPE. Remember, these are the item of PPE. Do you remember the item of PPE? What are the item of PPE? Someone tell me one of them. One of the item of PPE.
Purchase price.
Yes. No. PPE items. For example, let me give you an example. Motor vehicle. Now, purchase price is the cost of the items of the PPE. So we have the cost and we have the items. So the cost of the items of the PPE, for example, what makes the cost of the PPE? For example, we have the purchase price of that item. That is okay. Now, but we have items of the PPE. One of them is motor vehicle. Another item, plant and
Machinery. Equipment.
Yes, plant and machinery. Then you have another one, furniture and
Fittings.
Yes, furniture and fittings. What else?
Land.
What else? Anyway, you can also put land. So now, when we say that all these items shall use the same accounting policy, when we shall be applying the method of depreciation. So we are saying all these items we shall apply the same accounting policy when calculating the PPE or the value of the PPE for that item. Is that one okay? I think that one is fine. Now we have two methods. So after recognition, we can have two methods for measuring PPE. One of the methods is cost model, and the second item is the revaluation model. Now for the cost model, is where we shall focus. For revaluation model, this one you shall do it in your intermediate level. So in this case, this one is an X. We are not required to do it in this level. We shall concentrate on the cost model. Now, what does the cost model say? Now, after recognition of an asset, an item of the PPE, plant equipment, shall be carried out on cost less the accumulated depreciation. And this is how we find it. So for you to find the net book value or the carrying amount, remember the carrying amount, we shall take the cost, you less accumulated depreciation. So the net book value or the carrying amount shall be obtained by taking the cost, you less any accumulated depreciation. That one is okay. For revaluation model, that one is the next. For now, we shall not focus on revaluation. All these items relate to revaluation. We ignore them. We can talk about depreciation. Now, we said what's the depreciable amount. Depreciable amount is the amount, is the cost of that asset. So the cost of asset is the depreciable amount. So the amount which is subject to depreciation is the depreciable amount. So what is the depreciation? Depreciation refers to the decrease in value of an asset. So this one refers to the decrease. So when we talk about the decrease in value of an asset, decrease in value of an asset over time is what we call the depreciation. The decrease in value of an asset over time is what we mean by the term depreciation. Now, that one is okay. I know you may understand that definition. So you can either say depreciation refers to the decrease in value of an asset over time. Decrease in value of an asset over time. I think that one is okay. That one is okay. I hope you understand that what that means. So when you use an asset, the value of that asset will keep on reducing. So the decrease in value of an asset over time is what we call the depreciation. So let us see. Let us cite something hapa hii chini wanasema each part of this one, na nasoma this statement, wanasema each part of a PPE with cost that is significant in relation to the cost of the item shall be depreciated separately. This one is very, very important. Separately. Underline the word separately. Underline the word separately. Now, in an exam, they can ask you to do what? To ndasemaje? To prepare a statement called the non-current statement. Non-current asset movement schedule. Movement schedule. Movement schedule. So in an exam, they can tell you to prepare this statement. It's called the non-current movement schedule or the asset schedule. Some other people call it asset schedule. Now, if they tell you to prepare this schedule, remember, and I want you to remember that each item can be prepared separately. Underline the word separately. For example, if it is motor vehicle shall be prepared separately. You do motor vehicle separately. You do, for example, plant and machinery separately. You also do furniture and fitting separately. So when we say each part of the item of the PPE with the cost that is significant in relation to the total cost of such item shall be depreciated separately, and therefore you shall determine the depreciation of this amount separately. So utafanya tuchukue the cost of motor vehicle, you add with the cost of PPE and the cost of furniture, then you do what? You determine the depreciation. No, we shall do it separately. For unaanza na motor vehicle unachukua cost yake, then you determine what we call the depreciation. You do the same for furniture and plants separately. You don't mix. So each item shall be determined separately. Now, depreciation charge for the year, each period shall be recognized in the profit and loss. This one is very, very important. Underline this one and put a note somewhere. This one, Adiapo. Depreciation charge for each period shall be recognized in the P&L, profit and loss. Now, meaning it will be an expense to the company. So, if you recognize the depreciation in P&L, it means you are recognizing it as an expense. So, the depreciation charge for each period shall be recognized in the P&L. What does it mean? It means you do what? It means you debit. You debit or you credit the P&L. Do you debit or credit the P&L? Yes. Do you debit or you pay the P&L? You debit the P&L. So you debit the P&L because it is an expense. So expense are debited in the P&L. So when you talk about the P&L, so you debit expenses. So you debit expense. So when you calculate the depreciation charge for the period, make sure you charge or you recognize that depreciation in the P&L. So you shall debit it in the P&L. I will show you how to debit the depreciation in the P&L. That's number one. Now, this statement is also important. This is statement. The depreciation amount of an asset shall be allocated on a systematic basis of its useful life and shall reflect the pattern in which the asset future benefit are expected to be consumed by that entity. That one is very, very important. The depreciable amount, remember what's the depreciable amount? So the depreciable amount of an asset shall be allocated systematically, allocated on systematic basis over its useful life. And we shall use various methods. So we shall have various methods that we shall systematically allocate the depreciation amount of that asset from time to time. So we have various methods that we shall use to allocate, the depreciable amount of that asset over its useful life. Which are those methods? Now let's read this statement here. This statement. So a variety of depreciation method can be used to allocate the depreciation amount of that asset on a systematic basis. Number one, straight-line method. This is the most common method. Diminishing method, also common method. And then the unit of production method, which is not such common. Now, this one is also called reducing method. This one is also called the reducing balance method. It's also called the reducing balance method. So, ukiona kwa mtihani amesema the word reducing balance. Reducing method. Reducing method is also, that's another name. So that is another name. That is another name. Okay. I think hadi hapo tuko sawa. Now, let us have the straight-line method. What does the straight-line method say? Now, the straight-line, when you talk about the straight-line method, the depreciation value is constant from one period to another. So the depreciation value is constant from one period to another. That's what you need to know. So when you talk about the straight-line method, the depreciation value is constant from one period to another. So we can say, under straight-line method, the depreciable amount is the same throughout the useful life of the machine. The depreciable amount is the same throughout the useful life of the machine. So the diminishing balancing method and the units of production method. So these are the methods actually. We have the three methods here. These are the methods. So we have the three methods: the straight-line method, the diminishing method, or the reducing method, and the units production method. Now, straight-line method, straight-line depreciation results is a constant charge over useful life of an asset. The residual value does not change. So tunasema it has a constant value over useful life. So the depreciation you calculate the year one will be the same depreciation in year two. It will be the same depreciation in year three. It will be the same depreciation in year four until that asset is sold or that asset is disposed. So you need to know when you talk about the straight-line method, is that the straight-line, the depreciation value will be constant from time to time throughout the useful life of that asset. Number next, diminishing value. Now, the depreciation value will not be the same from time to time. So we can say depreciation value reduces the year, reduces this depreciation value reduces year after year. The depreciation value reduces year after year. So under reducing method, the depreciation value or depreciable value. So depreciation value or the depreciable value will reduce from year to year over its useful life. Reduce from year to year over its useful life. Its useful life. And then you have the last one, the units production. Other people call it the sum digit. So this one is also called, let me show you. The last one is also called, you can also call it, let us call it, it's also called sum of the year. Sum of the year. Sum of the year digit method. So the last one, the units of production method is also called the sum of the year digit method. Sum of the year digit method. I will tell you how to calculate them tomorrow. Ratio value, we said we don't need these items so much. Now let us see this is the residual value. Now remember when we talk about the residual value is the value which an asset can be sold. So remember, for example, umenunua asset 20 years ago at 20,000. You are selling it today at 5,000. Now that 5,000 today is what we call the residual value. So the residual value of an asset may increase to an amount equal or greater than the assets carrying amount. If it does, the asset depreciation charge is 0 unless and until its residual value subsequently decreases to below its value. For example, no assets 20,000. Let us say no asset 20,000. Ukatumia hiyo asset for 5 years. Now 5 years imeisha, now you want to sell that asset. So unauza today at 5,000. You are selling that asset at 5,000. Now unless the residual value decreases, so unless this residual value decreases to an amount below the carrying amount, then if it does, the asset depreciation charge is 0. Now let us assume that the carrying amount, this is the residual value, but the carrying amount, for example, is 6,000 now. 6,000. Now, if unauza at 6,000, now if the carrying amount is 6,000, now unauza at 5,000, then the residual value is less than the carrying amount. So remember, for example, if the carrying amount is 6,000 in the balance sheet, but unauza at 5,000 today, the residual value, this means that the residual value is less than the carrying amount. Now, but if, for example, the carrying amount, this carrying amount is 4,000, it is 4,000. What does it mean? It means that if you are selling this amount at 5,000, you are selling this amount at more. It's more than the carrying amount. It's more than the carrying amount. Now let us see. The residual value of an asset may increase to an amount equal or greater than the carrying amount. So it can be either more or less than the carrying amount. Remember, the carrying amount is 5,000. So the carrying amount might be more than the residual value. So if the residual value is 5,000, the carrying amount can be more than the residual value, which can be 6,000, or it can be less than the residual value, which can be 4,000. Now it can so the residual value of an asset may increase to an equal or greater value of the carrying amount. Now, if it is more than the carrying amount, let us see now if the residual value is more than the carrying amount. If it does, the asset depreciation charge is 0. Now, if the residual value is more than the carrying amount, depreciation charge is 0. So depreciation charge is 0. So if the residual amount is more than the carrying amount, the depreciation charge is 0. But if the residual value subsequently decreases to an amount below the asset carrying, if it does, the asset depreciation charge is 0 unless the residual value decreases to an amount below the carrying amount. So in the case where we have the residual value less than the carrying amount, then in that case we have the depreciation. So in the case where the residual value is more than the carrying amount, then we shall have what we call the depreciation. And remember, the depreciation is recognized in the P&L amount. So remember, it is recognized in the P&L. So the depreciation value is recognized in the P&L, and it is debited in the P&L. So the depreciation is debited in the P&L. I think that one is okay. Hizi mambo zingine ni kelele. We don't need to talk about this. Useful life, we say that the useful life has two definitions. One, it is the amount expected. It is the amount of time expected to be used. Amount of time expected for the asset to be used. And the other one, it is the amount of units required to be used, to be produced by an asset. That one is okay. We don't need to talk about them again. I will share this PDF. We shall pick what is important to you. I'll do this PDF later. This one is not important. Impairment, no. The recognition, no. Presentation, no. So tumemaliza. So I think now when we meet tomorrow, tutafanya maswali. So I think now when we meet tomorrow, we shall fanya masomo. In an exam, they will not ask you to talk about presentation, but when you be intermediate level, you present what are the presentation disclosure of IS 16. So that one can be asked in intermediate level, but in foundation cannot be asked. So also the recognition. Now, when do we recognize an asset? So when do we recognize an asset? Now, when we dispose an asset in most cases, or when that asset does not generate any future economic benefit, but you cannot be asked in an exam. So, but if you are doing an exam in intermediate level, they can ask you to state when an asset shall be recognized, and you shall say an asset shall be recognized when you dispose that asset. So ukiuza haiko kwa your financial statement, you recognize it, remove in your financial statement. Or number two, when that asset cannot generate any future economic benefit. That one is okay. Impairment, that one we shall not talk about it. Shall talk about it in intermediate level, and then the rest. This one also, the rest of the items shall talk about them in intermediate level. In this case, this one becomes the end of the PPE. So we shall meet tomorrow and do question. So this is the question we shall do. I want you to have this question. Let me open that question for you. Let me open that question for you. That is the question that we shall do. Let me see if I can get that question. Let me see if I can get that question that we shall do it tomorrow. Can I pass paper query? Yes, I have it. Let me present to you. Now, these are the questions that we shall do it tomorrow. Very hamna class kesho. Do you people have classes? Kwa shule hapo? Na mnaongea polepole hata msikiki. Ama mchakula. Can you see the screen? Can you see my board?
Yes.
Good. So let me show you the question that we shall do tomorrow. So let me show you the question that we shall do tomorrow. We have two questions. There it is. Can you see the question? Now, ukiangalia swali anasema, this question is for which sitting? Let me tell you which sitting is this. This is the question that we shall meet tomorrow. That is August 2024. August 2024. August 2024. August 2024. Question number 5C. The question reads: the following information relates to the non-current asset of Daraja Ltd as 1st April 2023. We have the non-current asset. You can see this one is the PP. Let me show you the PP. These are the PP. We have the freehold property, we have plant and machinery, office equipment, and so on. We have their cost and we have their depreciation, you can see. Additional information, number one, acquisition. We need to talk about acquisition. Acquisition is where an asset is acquired for the first time. So the initial recognition. So initial recognition is recognized at cost. You can see there. Initial recognition is recognized at cost. So information number one. The foreign and current asset was acquired in the year that 1st March 2024, and they were acquired at that cost. Number two, the non-current assets were disposed. So we talked about the disposal. Disposal is a situation where the asset is sold. Now, when we sell the asset, it will also be recognized at cost. But these are the sales price, the sales value of those assets. And we have the accumulated depreciation. You can see there, we have the accumulated depreciation. We have the depreciation rate. You can see each separately. So we say each separately. So plant and machinery, 20%. Office equipment, 15%. Motor vehicle, 25%. Then there was a change in accounting policy on 1st August 2023. So on information number 4, on 1st August 2023, the management of Daraja decided to start depreciating freehold property at a rate of 25%. Remember initially ilikuwa ngapi? Property plant, freehold. Now freehold was not depreciated. So kurudi hapa, this one, freehold was not depreciated. So the depreciation amount was 0. But from 1st April, now they decide to charge depreciation of 2.5%. So required non-current asset movement schedule for the year ended that 1st March 2024. The max is 10%. 10 max, not 10%. The max is 10 max, which is 10%. This one is 10%. So fanya sorry upate yote is 10%. So can you do this question? I give you as an assignment. Can you do that question? The non-current movement schedule. Kasi huko anasema kasi kwa 7. 7 ya saa ngapi, usiku ama mchana? Hiyo kati ni ya saa ngapi?
Ni usiku.
Kati ni ya saa ngapi kesi? Yes. Sioni kama kuna hiyo kati, mnadanganya. So we meet very early in the morning, tomorrow from 7 in the morning. We shall start our question very early in the morning so that we do this question. We have another question. So this one is one of them. Then you have another one, 2017. There's another question here in 2017. Let me show you. Mnikumbuke kwani utafanya kesho. So kindly remind me tomorrow class in the morning, very early in the morning from 7. November 2017. Can you see that question? November 2017, question number 1. November 2017, question number 1C. November 2017, question number 1C. The question says, these are the questions that we shall do it tomorrow. Let us read together. The question says, the following information relates to Jirani Mwema as at 1st October 2016. You can see it there. So we have the freehold property, pit, plant and machinery, office equipment, and motor vehicle. All these are PPE. All these are PPE. They are measured at cost initially, and you have the accumulated depreciation for some years. Information number 1. Number 1 is always about acquisition. So the following non-current assets were acquired during the year and that is September 2017. So these are the items which were acquired. You see the dates and the machines at their cost. Then we had a disposal. So some items were disposed during some years here. You can see we have 3 October 2016, January 2017, and September. We have the items that were disposed. We have their sales proceeds, their cost, and their accumulated depreciation. The same as the other question. The rate is tofauti. Property, plant and machinery 20%, office equipment 15%, and motor vehicle 25%. Then on October 1st, 2016, freehold was not did not have any depreciation rate, but from 1st October 2016, the amount got to 2.5%. Required 10%, 10 marks, non-current movement schedule. Is this question same as the other one? Yes? Hiyo swali ni the same hiyo ingine? Ni the same?
Ni the same.
Ikifanya kesho moja mtafanya moja, sivyo?
Yes.
Yeah.
So we meet tomorrow, we do one of them. Mtaniambia, so go and take those 2 questions clearly. Then mtaniambia in class which one you want us to do. Which one we want us to do. Don't write the question because sijawapatia the schedule. So sijawapatia the schedule for the movement schedule. So I will give you the format tomorrow. We do one question and then you shall do one of them. I have also shared another PDF in the group for PPE questions. We shall do also other questions from there. When it comes to maybe provision for depreciation, disposal for machines and so on. So with that one marks the end of our class today. Let us meet tomorrow. We shall communicate in time about your class so that we fix our class as soon as we can. So good night. Yes, Rorin.
First ikuwe 7 usiku.
7 usiku, we shall talk about it tomorrow. Let us see first kama tutapata time tomorrow during the day. If no, we shall fix it during the night.
Okay.
Okay.